Good morning, everyone, and welcome to Money Talks with Attorney Coral. I am Attorney Coral Plus, the host of the show that we bring to you every Thursday morning from 11 a.m. till noon on WNOV, which is 860 a.m. and 106.5 FM. Um, we've had interesting topics in the last several weeks, but one thing that I like to circle back to talk more about is the topic of insurance because there's so many different types of insurance. And I have with me in the studio this morning Dr. Mose Fuller from the Columbia Board of Directors, who's going to help me talk this morning about insurance. Say hello to the people, Dr. Fuller.
Good
Yeah, we got
morning, Milwaukee. How's Milwaukee doing this morning?
yeah, everybody's doing well, I hope, and happy to hear from you this morning. What I love about doing this show is that we aren't giving legal advice.
Exactly.
And this morning we're not even going to be giving insurance advice,
Nice.
even though you're an expert and well qualified to do so. But we don't like to do those things
No.
over the radio. Those are the sorts of things that require one-on-one
One-on-one.
appointments, right? So that we
At the
can
kitchen table, so to speak.
yes, just so set a time to meet with you and get the knowledge or information that people are looking for.
Right,
But
right,
for
right.
today, it is educational and hopefully informative. And I do always like to encourage the audience to call in if you've got questions or even comments that you'd like to add to the discussion. The number here is 414-444-5250. That is 414-444-5250 or 5253 for anybody who wants to chime in. Um, Last week, Dr. Fuller graced me with his presence as well, but we
Mm-hmm.
were given kind of a recap of the annual meeting that
Annual meeting, yep.
Columbia had, the following, or no, the week prior, which is why neither one of us was able to be here that week.
Right.
Yeah, because we needed to be available for that annual meeting. And so that was a very good check in with where things are with
Mm-hmm.
Columbia. But prior to that, we were doing almost, I want to call it like a series where we're talking about insurance. I spent the day talking about the area of insurance where I believe I have the most expertise, and that's when it deals with auto insurance
Right,
policies
right.
or homeowners insurance
Policy,
policies,
yeah.
because I spent a lot of years being an insurance defense litigation
Mm.
attorney. So I definitely learned those contracts inside and out and was able to represent insurance companies in court, unfortunately against people that were hurt because the insurance companies need defending too. And that was a big part of what I did for a good 20 years or so. um then since then I've started handling more cases that are on the plaintiff's side of things, in other words, on behalf of the people who've been hurt.
Mm.
So no better way to navigate the waters of dealing with insurance contracts and insurance companies than to have someone who used to operate almost completely on their behalf.
Right.
So that was one of the things that I did with my practice for a number of years. So we had an interesting conversation about the requirements for insurance in Wisconsin, some of the do's and don'ts, some of the important provisions of the contract. We talked about uninsured motorist coverage and why it's so important to have that. Sometimes people think that they can get partial coverage and that makes it
Mm.
okay. Then they have an accident with someone who has no insurance at all, and then they're wishing they had different types of coverage to cover themselves against somebody else's negligence. So I always, in my opinion, and I'm not advising, I'm just saying that it is my personal preference to have full coverage. That way, you're covered no matter what comes your way, and try to have the appropriate policy limits to protect you if you own certain assets and that
Right.
sort of thing, that you don't want to have exposure by getting caught with having a policy that's too short, and you could end up with some personal liability. So all those types of things that we kind of talked through. But this morning I would like to pivot and talk about the insurance area of insurance that you work in, Dr. Fuller.
Yeah.
So please tell the audience a little bit about what you do with insurance and the type of insurance that you offer.
Well, the type of insurance the area that I work in is basically term life insurance. None of the cash value, whole life, none of that. Basically term.
Okay.
And the philosophy around the term, see, I guess when you deal with insurance, you have to have a type of philosophy of how you're going to talk about your protection. Life. Basically, we view insurance as an instrument that protects your money.
Mhm.
If you something happened, you don't have any insurance, then you got to come out of your pocket. But if you have insurance, it protects it. Life insurance is like that. It protects your money. It insures your life. It's insurance. The philosophy that we have is that insurance creates an estate. So when usually you hear it all the time in the city across the nation is that somebody died and they didn't have any insurance, so now they either got to go GoFundMe, or they got to try to get the family to come up with that, and
Yeah, we
that's
see a lot
ten
of that.
thousand dollars, $15,000 for burial, and then that's why people need to have insurance. Your
Mhm.
philosophy of life that I need to be protected. You insure your home, your car, your whatever, that's insured. So one definitely should have insurance on their life. And the way we actually look at it, the best philosophical view about your insurance is that you should have a philosophy. Number one, you should say, well, I need it. I want my family to be insured. I want my family to be protected. I want my children to be protected. So if anything happens, so that we say, well, if we die, well, take the if out of it. We are going to die, and we just don't know when.
Right.
That's the
So
that's
it's not if you die,
yeah,
it's when
when.
you die.
And so therefore you protect yourself just in case that you die. And somebody said they died before their time. Well, now that's debatable. The Lord is in control of that. So, but here's the fact of the matter: is we're going to die, and you need to be protected. But one of the philosophical viewpoint is this: is that insurance protects your money. Your life needs to be insured, and the best way and the cheapest way is to insure yourself when you're young. When you get older, it's always going to be expensive because insurance
Mhm.
is a risk.
Mhm.
The insurance company don't want to take a risk. And so therefore, when like old guys like myself, then it's going to be expensive, and sometimes you might not even be able to get it.
Right.
So that's the thing about it. So term insurance, we don't do cash value. Cash value is insurance that has a death benefit, and it also has a savings component to it. And I'm sure then the insurance company is also taking a risk with that saving component, to it. So my philosophy with the type of insurance that I deal with say that you shouldn't. That's not the best way to buy insurance.
Okay.
The best way to buy insurance is that if you're gonna get a death benefit, you do that. And if you want a saving component, where you need to be able to start your Roth IRA or your mutual fund or whatever. So I do that also.
Right.
So they
Okay.
see basically I just don't have an insurance license. I have an investment license, what they call a Series 6 and a Series 63.
Okay.
And that's an investment license. So anybody that if anybody, if I do an insurance policy for a person, one of the best, one of the wisest thing that they could do if they want to really maximize what they are trying to get out of this operation of having insurance and also preparing for the future. Because with a term insurance, you just have the insurance and it has a certain term, 15
Mhm.
years, 20 years, 25 years, 30 years, 35 years. And
Mhm.
then you, after that time, then you have to come in and look at it and redo it again,
Okay.
you know.
And I was going to ask you just to break that down a little bit more because what I like to do with these shows, you're an expert and you've been in the industry and you've been working for a long time, and so terms that you're using that will seem so simple and so basic to you, we might have people listening that don't know what that means. So if you just want to talk about for 1 second, what term insurance is, like what does that mean to say that you've got a term insurance policy versus the one that you talked about
Right.
a little bit earlier that you can use as savings and
Right.
all of that.
Well, a term insurance is basically it's a simple way to buy insurance, and one of the least expensive way to buy insurance. And
Okay.
that's what you really want to do. You want to buy insurance as cheap as you can. Okay, so you just buy it for, if a person come in and say, okay, a person do want to do a policy with me that's in their 30s, and they say, well, I give them a long term, a 30-year term. So that means that they have that insurance for 30 years, and then they have to look at it again, because after the 30 years, they got to go in there and redo it and extend it. They might not have to take a medical. They might not have to do any of that other stuff they did once they first started,
Mm-hmm.
because they've been with the company for a long time. But here's the difference with the term. They don't have that so-called cash value or saving component. Now, I will ask them, say, look, you're gonna get this 30-year term, to add value to what you're doing. Do you want to start an investment? I can set up you an investment
Okay.
of saving so much a month, and at the lowest we can go is $25 a month, and
All
that'll
right.
fit almost anyone's budget, really. And
So that's where like the IRA, you said
yeah,
the Roth
Roth
IRA,
IRA, and that
where
is
that
that
would
is
come
right.
in.
And I
Mm-hmm.
tell you, one of the best things anybody can have is a Roth.
Okay.
I
Why?
mean,
Why is
well,
that? Why is the Roth
because
so
but
good?
some of the tax benefits of it.
Okay.
That's the main thing, and
Mm-hmm.
that's for another whole nother program. But anybody that know anything about investment, they'll know that a Roth is a good instrument, because
Mm-hmm.
there's certain tax benefits that you have.
Mm-hmm. But
And
there's
then,
a limitation. I don't know. We can talk more about it on another show. But there's a limitation on the Roth IRAs,
oh
though.
yeah,
That there's
that's a
only so
limitation.
much you can put in there
Yeah,
in a
that's so
year.
much you can put
It's
in.
like $7,000 or $8,000.
A
It's
year
pretty
they have
low.
that, but then that's a lot of money.
Mm-hmm. If you're young.
Yeah, if you're young. See, that's the thing about it. And the other thing that I'm saying with that, with saving, the best thing you can do when you're saving is to start young.
Yes.
Saying somebody could say, conceivably, somebody could get a Roth paying $100 a month on every month with a Roth, just putting $100 in, just leave it at $100 a month, putting $100 a month. By the time they're my age, they could be a millionaire.
Mm. Okay.
That's
Yeah.
that's a fact. See, that's how money grows.
Right.
It's a time factor. When you get older, then if you want to get that type of return, you got to put more in.
Right.
But you see, when you're younger,
you can put in the
you
lower
can put the lower
amounts.
amount and then let it sit there, let it ride. That's all
Right.
people do. They just start saving when they're young, and then they get older, then they got money built up.
Right.
And then it because money compounds. I mean,
Yep.
look at the stock
That
market
compound
now.
interest.
Yeah,
Mhm.
and that's the thing that people need to do. Just like the stock market now, I looked at it yesterday. It's 48,000. It never been that high before.
Mm-hmm.
And so people that have money in the stock market, it don't always go like that. But if you can afford to deal with the ups and downs, then in the long run you're gonna make money.
Well, you just said it, in the long run.
Yeah.
That's why it's important to start young.
Start young. And see,
Mhm.
that's the advantage. That's how you build wealth. And that's the same thing with insurance. The best thing that any young person can do. Now, this is the philosophy of understanding how insurance works.
Okay.
See, understanding how you protect your money, how you grab control of your money and make it work for you.
Okay.
See, that's the thing. That's what we're really talking about here. It's a philosophy. And I'm going to stick with that philosophy of how I'm going to buy my insurance, how I view insurance as an instrument in my life that's going to add the most value to my family.
Okay. 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 So,
I mean, that's the key.
Yeah. Yeah. So I want to go back to something that you said a few moments ago about having a term policy. If someone's in their 30s, let's say they're 30 years old, let's just say, or 35 years old, and they come and they get a term policy, you write a policy for them. By term, I'm just being very literal. So are we talking about the life of the policy? So maybe it's a 30-year term.
That's exactly what we were talking about.
So that's what we're talking about. So then, all right, so they're 35 and time flies, and now they're 65 and they are still here, still alive and well. So the policy didn't get cashed in. So what do they need to do at that point in order to maintain that policy?
Or what they'll do, they'll come back in and talk to me, and then we'll look at it and we'll figure out the best way for them to keep that policy. But here's what I would tell them. See, here's the key. Here's the philosophy about buying term insurance.
Okay.
See, when you buy term, remember what I said in the beginning, if you're going to buy term insurance, you also want to have you a investment component. Okay. Because remember, that's what you're talking about. You're talking about not only you having life insurance, but you want to have some money when you get old also. I think one of the worst things people can when they get old is don't have any money.
Mhm.
That's probably one of the worst things that can happen. And the way you do that, you prepare for it. That's what they're trying to do with the cash value. But the only thing with the cash value, you have two components, but in most cases you can only get one, but you're paying for two.
Okay.
And that's what people don't, and then that's a whole nother discussion also. People,
Yeah.
that's what people got to understand. So when you buy term and invest the difference, that's the philosophy with the type of insurance that I deal with, buy
Mhm.
term and invest the difference. Now, if
Mhm.
I didn't have investment license, I couldn't tell people that because I wouldn't be able to help them invest. But because I got,
Mhm.
not only did I get my insurance license, but not only did I, and then I said, well, okay, if I want to be able to do this thing the right way
Mhm.
to really help people, to really
Mhm.
add value to people, I got to go get another license.
Okay.
And that's the investment license. And it was a lot harder than the insurance license.
Oh, I would
I mean, I
imagine.
had to take the test a few times because and then you go in there, you think but then you just don't because they give you
Right.
a test and you only got so much time, and then you just got to know how to take a test.
Right.
And so that's the difference. So when I tell them, so if you're going to have a term policy for 35 years, now you should be saving some money. You should, okay, Pastor, and I got clients that do that. They
Okay.
invest in it. They not only do they have the life insurance, but they have the investment component over here.
Okay.
So
Okay.
they're paying the life insurance. So now once they get 65 years old, if they got enough money in that investment, and if they're putting it right, if they're doing the best that they can, they
Right.
probably gonna have a lot in there.
Right.
You
Right.
save money
And it compounds
consistently,
to over
compounding
30
over the years,
years.
you're gonna have some
Yes.
money in there. So what
Mhm.
does that mean? That means that now you are self-insured.
Oh.
Yeah, because you got money.
Okay. Okay.
And then you might not be, you might not want to be paying on a policy for life. You might say, well, okay, I don't need this policy no more because I got 100,000, 200,000 in my Roth.
Okay.
So now if you want to bury, then you got the money to bury it. So you don't have to be going there.
Right.
So that's the whole objective. That's the philosophy behind it.
Mhm.
Buy term and invest the difference.
Okay.
See, what you're going to do when you invest, when you in control of your investment, you're going to try to get the best interest rate that you can. Now, of
Mhm.
course, if the insurance company invests in your money, they're not going to give you the best rate.
Well,
That's just a
that's what
fact.
I was going to ask, because
They're not going
if
to
you've
do it.
got one of those policies where you're trying to use it where, well, you are using it as a savings policy,
Not the best way
then
to
you
do it.
really don't have the say of where they invest
No,
your
you
money
don't.
and what kind of return you get,
That's exactly right.
right?
Exactly. And so
Mhm.
now the other thing is, so then people do it because they want to be able to borrow it from that policy that they have. Well,
Mhm.
can I borrow? I have folks ask me that all the time. Well, can I borrow it from it? I said, yeah, I can set it up so that you can
Mhm.
borrow from it. I can help you set up a Roth
Mhm.
that you set it up, and it'll start billing from day one.
Right.
And then stay enough year. From day one, it's billing. 4 or 5 years down the road, you run into a rough spot. You want to take a couple hundred, a few hundred out or whatever, you can do that. And not, it's just the only little thing you have to pay is the redeeming costs or whatever little tax stuff you got going on with it.
Mhm.
And the taxes stuff, that's another department. I don't deal with the tax part, but I let them know that that's something that they have to report to the tax people, that
Mhm.
they have this Roth and they took this much out. So when
Right.
you do your taxes, you make sure that you let the folks know that you did your taxes, that this happened.
Right.
And
Right.
so, but then here's the thing about it. You are in control of your investment and you're taking the money out and you're
Mhm.
not paying the insurance money to take your own money.
Right.
See,
And
that's
and
the
and I
that's
want to
the
talk
thing
I want
about
to
it.
talk more about that, Doc, when
Yeah,
we come back from a break, because I think that there's some things that need to be explained about that in a little
exactly.
more detail.
Yeah.
But we got to take a break right now, and we'll be right back with more Money Talks with attorney Coral and Dr. Mose Fuller. Talks with Attorney Cole. I have Dr. Mose Fuller in the studio with me this morning, and we were talking about life insurance. We were talking about term life insurance, and we're talking about the what do you call it? Whole life?
Whole life,
Okay,
universal
that's
life,
okay.
whatever,
Universal.
whole life,
Mm-hmm. We're
cash value.
Okay, and that's what I'm getting at. We're talking about the difference between the cash value policies versus the term policies.
Right,
And you're saying, well, if you have a term policy, a lot of times what you advise or guide people towards is having their own investment on the
right,
side. Get yourself a Roth IRA because there's some
exactly.
tax benefits that you should talk about with your accounting professionals. We're not giving advice, we're just discussing things this morning, and just hopefully that's informational for the community. So you were talking about all of that a little bit before we went to the break, Doc, and I would like for you to elaborate a little bit more, because I think um, one of the things we were starting to maybe touch on is when the insurance company, you're doing your savings through the insurance company, and they invest the money
Mm.
for you, that you don't have any control or any say of where your money gets invested or how your money gets invested. So talk about that a little bit, maybe pros and
Yeah,
cons.
so basically, uh, with cash value, the insurance company in control of your policy. They're in control of your investments. You have a death benefit, like I said, on one end, and then you have an investment or cash value. So when you buy your insurance, you're paying for two of them. So much is going to the death benefit, and so much is going into the cash value. So, as a rule of thumb, the first 5 years or so, the cash value is really not accumulating anything, because the
Okay.
insurance company have, certain insurance company have rules where you're paying for administrative costs or whatever it is that they pay for while you're buying the cash value. So now our philosophy is, when you buy term and invest the difference. You buy term insurance, cheapest type of insurance, and that's what everybody want to get. The cheapest, the cheapest amount of insurance, the cheapest type of insurance. With insurance, you want to have enough of it. That's what people need to have. You want to have enough, because once again, the philosophy is that insurance creates an estate. You insure the person in your life that's making money to support your family. They bringing in $60,000, $100,000, $200,000 a year, whatever. And a rule of thumb is that whatever your yearly salary is, your insurance should be 10 times that.
Oh, wow.
And see,
Okay.
now that makes sense, because remember, we're talking about you want to get it when you're young.
Right.
That's the key. See, when you're old, then of course, when you're old, you have a lot of money, but then you're not even thinking about insurance, because you would self-insure. Because your
Mhm.
money self-insures you.
Mhm.
But when you don't have money and his insurance is cheap and your health is good, insurance is cheap, you want to get as much as you can.
So what if you did not self-insure and you get a term policy when you're young, and then you turn 65 and your policy, now the term is up?
Mhm.
And what if that's right when your health fails? Do you have to go through underwriting and possibly be denied that coverage?
Well, it could be, it could be, especially if your health is real bad. So in other words, there's one thing for sure, it's going to be more than it was when you were young. See, that's
Mhm.
why they say, remember, it goes back to the philosophy. You buy term and you invest it different. So if I'm gonna do my due diligence with you, if I assist you, if I add value to you with an insurance policy,
Mhm.
if I'm not just selling you something.
Right.
See, but the whole objective, remember, the philosophy of life insurance is that I want to add value to people.
Right.
So when I add value to people, I want to be able to give them a holistic viewpoint of how this product and my interaction with them is going to benefit them to the best of my ability and to the best of
Mhm.
their ability. So I want to give them all of the instruments that can truly add value to them. So I'm going
Right.
to tell them is, if you're going to get this policy, you young now, you also need to have an investment component to it, because when you get old, if you try to do anything as it relates to an insurance policy, it's going to be more expensive. But here's the real catcher. The real caveat is that if you are saving $25 or $50 or $75, you know, I did this one book. I read this one book. This guy talked about. He's a black guy, does some stuff on investment. I forget his name. He's the $5 a day plan.
Okay.
That's about $150 a month.
Okay.
$5 a day.
That's that
Five
cup of,
times
that's
30.
that cup of coffee at
Yeah,
Starbucks that we
five
all like
times
to get.
5 times 30 is 150, right?
Mhm.
And so if you just do 150 a month
Mhm.
for 25 or 30 years, are you gonna have a bank?
Yeah.
You might have some other problems, but I'm telling you right now, one of them won't be money.
Right.
And that's what people have to understand. But it's the mindset.
Right.
So then what you want to do is you want to tell people the best way to buy it is buy term and invest it different. But now I got to be able to help you with that if I have license. But a lot of people might sell you insurance that don't have license, so they can't
Yeah.
help you that way.
Yeah.
So then the cash value people that sell cash value the other insurance, you can have that component to it. But the downside is that people get that because they want to borrow it from their policy. That's what they always tell me. Is this the type of policy that I can borrow from? I say, I can help you get that type of policy if that's what you want, but we don't sell cash value. We just sell term.
Mhm.
And if you want an investment, I can help you set that up.
But even isn't that even kind of a mindset that it would be, well, this is just my opinion again because we're not giving advice, but kind of good to get away from this mindset that you want to set something up with the thought already that so I can take the money out
Right.
prematurely.
Exactly.
I want to borrow. I want a borrower
Right.
mentality.
That's exactly. So then you want to educate them too. So it's an educational process.
Right.
That's why I said the philosophy of buying insurance and doing with instruments. When you really, it's a death benefit, but remember what I said too, that it creates an in a state.
Mhm.
In other words, the reason that I'm going to buy insurance is because someone in my family that is the breadwinner, so to speak, and that person might pass away, might go on to be with the Lord. So then how is my family going to be taken care of? That's the purpose, really.
Right.
That's the thing that makes insurance makes the most sense. You got to think about it in that way. Otherwise, you can get off into these things that I'm gonna have a burial plan. Then some people want a burial plan. Some people didn't want to have this, where I can just be put in the ground and then that's it and whatever. But that's not the real concept. The best philosophical view of having an insurance policy that's going to be in place, that's going to protect your family and going to provide for your family once the breadwinner had transitioned to be with the Lord.
Right. And you said in the earlier segment that the general rule of thumb is that you would like to insure that breadwinner for up to 10 times their
Yay.
annual salary.
Exactly.
That's more than I expected you to say.
Oh, that's a rule of thumb.
Yeah.
Really, that's a rule of thumb. And then but now remember what I also said too. Insurance is cheap when you're young, when you buy it, especially term, real cheap. So, like I say, and buy term insurance, invest is different. That's the philosophy behind it. See, it's looking at things from the big perspective, a broad viewpoint.
Right.
And looking at creating an estate, protecting your family. I think as a pastor and that one that preach funerals and bury people and talk about all that stuff and seeing all this stuff, got a lot of folk in our church didn't have any insurance. I remember when my brother died in Mississippi, he didn't have any.
Okay.
And we had to go down to Mississippi, and just guess what happened? We had to help dig the grave.
What?
Yeah.
Oh my goodness. I thought you were going to say they asked us to contribute money. You're
We
talking
did
about
that
digging
too.
the grave.
We contributed money in that.
I wasn't ready for that, Doc Fuller.
Yeah, I'm telling you, this is what happened.
Oh wow.
I'm not making this up. This is what happened.
Mhm. Mhm.
Yeah, and
So that
so
was before the days of GoFundMe, because
yeah,
now we
well, I
see
mean,
that
you know
all
what
over
I'm talking about in
Facebook.
Mississippi, and and some of the rules when you bury folks in Mississippi, you know, I'm from Camden, Mississippi, so they just bury people in the back of the little country church. That's the
Mhm.
graveyard site in the back of the
Mhm.
church.
Mhm.
That's the really, I was in that. I was born and raised in that town, and when I went down there, I remember I was down there in the early '60s, and me and my mom went to her dad's funeral, and I went with her, and then his name was Mose Lewis, and
Mm.
I could see his grave over there in the corner over there,
Mhm.
during that time. So I know that's what they do, and then sometimes they'll let you do it, if you don't have any money, and then people do that because you know, it's not that they couldn't afford to really provide for their dad, but sometimes family members just don't do that. They don't have the right mindset. They don't have the right perspective. See, that's where we are when it comes to why you have a lot of this stuff with GoFundMe, a cremation, all this stuff is because they're not thinking in terms of, I'm gonna die one day. Or they could be thinking that way, or they just, well, I mean, that's not significant enough for me to take some actions. It all depends on the mindset of the person and what they really want to do. And really,
Mhm.
and so when you're talking about this, so what we try to do is educate people. That's all we're trying to do this morning, educate people. Say, look, anybody listening don't have insurance, you should just think about, maybe I need to look at that.
Right.
I really do need to looking at my family. What if my son go out here and something happened to my son? You know what I mean? And for kids, man, you're paying peanuts, and so it costs nothing, you know.
Mhm.
Like my children are old and grown. I got insurance on them. I don't know
Okay.
if they got any on them, but I do because I know if they die, well, then they're gonna, and I know about it. Guess what? I'm gonna be the one that's gonna be responsible for
Mhm.
putting them in the ground.
Okay. Okay. Well, it sounds like we do have a caller. Caller, thank you so much for holding. Please go ahead with your question or comment.
Thanks for taking my call. I have insurance at the job, and then I have a 50,000 policy with the external insurance. Based on your conversation today, should I get a different policy in addition to the external one, or increase the one that I have already? What would you suggest?
Well, this is really just not really going into great details about when you have the policies on the job. A lot of time we have a policy on the job. You know what I mean? That usually works. That usually covers you if you're working there, and if you have your leave, and a lot of times then you're not really covered with that policy.
Right.
But you have another policy that's good. Now it's
But the
up.
one on the job is more than the $50,000 policy.
Well,
So,
that's good, but what if you get sick, and what if you're not there? Then it only covers you really that you can depend on if you're actually on the job, working full time, and doing actually coming in every day or whatever with your job. So that's the way
so
that
increase.
usually works.
Yeah. So you're suggesting increase the one I already have or go out and look for a different policy. Does it matter?
Well, sometimes remember what I said. My philosophy is the cheapest way you can get it. And what they're going to look at now is your age also.
Okay.
So
Okay.
that's
So
always going to be a
probably look
factor.
at my existing policy and try to increase
Right.
that one.
That's the way you do
Okay.
it. The one that you have externally, and the one
Hmm.
that you're getting on the job with the group life insurance on the job, where get all you can free, but also
Hmm.
protect yourself. So that's kind of like what that group life insurance is. You're getting what you're getting free, and the company gonna give you that. That's fine, but you want to make sure because if something happened, the company could be thinking in a different way, especially when it comes to paying out. So I would protect myself. You can increase the one you got if that's what you want to do. The one you already got, see what it's gonna cost you to increase that,
Hmm.
and as opposed to going out and getting a brand new policy.
And then, real quick, with the smoking, I heard that they're now considering if you smoke weed the same as tobacco. Because I've been checking no, but my spouse does smoke weed. So would that inhibit us some kind of way if something was to happen?
Well, that all depends
Weed
on
versus tobacco.
right. That all depends on the insurance company, and usually say if you're
Okay.
smoking, and the insurance company, that all depends on what they say about that. The best thing to do, really, is that if they got a question to say if you smoke, then you say
Hmm.
yes, you smoke. Because if they find out you're smoking, that could really be an issue.
But tobacco is different than
Well, yeah,
marijuana.
well, it's smoke. You know what I mean? But
Oh,
it
it's
all depends
smoke.
on
Okay.
See, that's what
Thank you, guys.
it's smoke, and but actually, you understand what I'm saying. The insurance company is gonna have to make that decision, But the best thing you can do on an application is tell the truth.
Yeah. So no, I appreciate that. Thank you so much, caller. Those are good
It really
question.
was.
But that was both very good questions. But that's a point of where things come into contract interpretation, and then
Right,
you end
right,
up in court, and
right,
one person says this, somebody else says that.
right,
So
right,
that's why I like your comment, about what you would do
right,
basically in this situation,
right.
because
Exactly,
we're careful that we're not really giving advice to
exactly,
people, but that's what the expert here today, Doc Fuller, that's what he would do
hmm
in that situation. So,
exactly,
just take that under advisement. But thank you so
exactly.
much for that call.
That's a good
Those were
question too.
great, great,
Good.
great questions. We
Yes, good
appreciate that.
points. Yeah,
Yep, yep. So that's good because that brings it into real life,
in real life, and
and
it
real life
happens.
examples. Yep, yep. But I mean, the thing that I like about what you're saying today, and we're kind of maybe even directing a lot of these comments to younger people, like,
Younger
you're
people.
young,
That's the
start
audience
now,
you
do
really
this,
want, man.
and you set them up for a term policy, but then they invest some money in a Roth IRA, then they get older, then hey, now you got an option here because now you're self-insured, now you got a pot of money sitting
That's the
there.
whole.
But what do we do about the people who didn't have a Mose Fuller to advise them, right? And maybe
And I'm
did
one of
you
those
didn't
people.
Yep,
See.
and you didn't have that licensure, or whoever was advising them didn't
Right,
have
right,
that
right.
licensure to talk about investments, and they paid into a life insurance policy, and they never thought they were going to live as long as they lived. This kind of happened with my dad. I think I remember, like, when he was getting up in age, and we saw these policies he had for this term and that term, and I'm glad he had such a long life, but he lived so long, all these policies were gone. And so he spent years paying into these insurance policies. And then when he got older and, well, eventually passed away, and there was one that helped with some of the burial expense, thankfully, because
Hmm.
that helped me and my sisters out a little bit in terms of
Hmm.
taking care of all of that. But it was a little disheartening, I guess, to say at least, when the time came that, wow, he paid into these policies his whole life. And now that his life is over, like, it. That's it, because there wasn't anything. The policies, he outlived the policies.
So did he have term over that group? The cash value, the lot of the policies he had, was it just term or all?
I think there might have been just term policies. I'm racking my brain a little to
Yeah.
remember because it's been about 10 years and I wasn't that focused on it at the time, but it just
Right,
occurred to
right.
me while we were sitting here that that's kind of what happened in that case.
You see, that's what it's. I'm looking at a note here said when it comes to insurance, buy the right kind of life insurance.
Mhm.
See, and then for my philosophy, the philosophy of what I'm talking about, teaching this morning is that term insurance. That's the right
Mhm.
kind for me, and for my philosophical viewpoint as it relates to life insurance. And
Mhm.
then remember the second component by the term, and then because it's going to be the cheapest, and you can invest
Mhm.
the difference. And
Mhm.
that's going to be my educational spin, so to speak. That if I
Yes.
want to really add value to what I'm doing with you, this interaction that you and I are having, if I'm going to be the person that's going to offer you an instrument of life insurance, in order to fulfill the full obligation of the life policy, what I'm going to say, well, here's another component that if you look at it, if you think it adds value to you, you should take this.
Mhm.
That's what I want to do, because in the long run, when you get older, remember, when you're younger, you need a lot of stuff. You got the kids at home, you got the mortgage at home, and all that stuff. Kids, you got some debt, you got the house mortgage, you got a whole lot of things going on. But when you get older, you're in kind of like a retirement mode. Kids are gone, and
Mhm.
so you really want to have some cash.
Mhm.
You want to have some cash. You don't need a big insurance payment that you have to make.
Right.
You need some money.
Right.
That's the thing that you need when you get older. See,
Yeah.
and so that's why the decisions that you make when you're younger are are huge. Those are catastrophic decisions that you really got to be at your best. You got to be thinking about your family. You got to be thinking about legacy. You got to be thinking about outcome.
Yeah.
You
And that's the hard part about it though, Dr. Fuller, because that's the age where they don't think about any of those
see
things.
that's why the educational component got to be, and that's why young
Yes.
people see. You know, youth has its advantages.
And youth is wasted on the
Oh
young.
yeah, it
That's why
is,
they
man.
say that.
Right. I mean,
I've learned that.
yeah.
It's true.
And then we all been there. When I was
Mhm.
coming up, I can tell you right now, I didn't know anything about money. I didn't know anything about insurance. Didn't have any. Didn't do the Lord just protect us. Did
Right.
not have any of it. Didn't know anything about money. I remember when I first got my job, boy, I get paid on a Friday and be broke Monday. Literally.
Mhm.
I mean, that's where we are today. See,
Right.
that's because you don't have no money mindset.
Right.
Because you've never been taught it. You're taught in your home, you're not teaching it at school. And so then money is just something that there's a disrespect for money. So if there's a disrespect for money, money have a tendency to leave you.
Yep. Sure
If
does.
you don't respect it, you put it in a hole. And you just can't lay money around like that. It's gonna disappear.
Right.
You remember that guy that had all this money, that this big drug dealer that they had? He had so much money, and he ended up still in jail. And he had all this money, and he couldn't know what to do with it. He had it, and the money was laying around. People were stealing it. Money was rotting. Had it.
Yeah.
And that's what happens
Right.
when you don't treat money right. That's what happens.
Right.
It goes to zero. So money has to be making money for you. It has to be working.
Mhm.
Because if money is not working, it's gonna disappear.
Right.
You
Right.
can't have it laying around in a shoebox.
Right.
And a lot of times that was our mindset. We didn't trust banks, we didn't trust it. We just, and our young folks, they got to be able to do something with that money. The millennial population, the young folks that we have, we got more of them than we got baby boomers than old folks. So then that's the population that got the money, but they're the brokest. Because they don't know what to do. They're not doing what they should be doing with the money.
Right. Right.
And they should be putting some of it away. In the church, they have what they call tithing, and that's a whole nother topic.
Right.
And so the tithe teaches that whatever the Lord bless you with, you wanna be able to give back 10% of the gross of what He blessed you with. And so then if you're going to pay a tithe of 10% of your gross, then you should at least be able to pay yourself the same, a 10%. You should be able to put 10% away.
There you go. There you
You
go.
should at least be able to do that.
Yeah.
And then ask the Lord to bless the remainder. So if you're doing the right thing by the 10%, then the Lord, if you really have faith in that the Lord can do that,
Right.
then He'll bless the other, the
Right.
80%. I mean, that's just faith.
Right.
We walk by faith, not by sight.
There you go.
So if you believe that, then God will bless that. So then it comes down to mindset, and it comes down to how you value your life in relationship to your money.
All right. Well, we'll talk more about that when we come back from the break. Thank you so much, Dr. Fuller. I love all those comments of wisdom. We will be right back with more Money Talks with Attorney Coral after the break. We're back with Money Talks with Attorney Coral. I'm Attorney Coral Plez, and I have Dr. Mo Fuller in the studio with me this morning. Say hello to everyone, Dr. Fuller.
Uh, Hello, Milwaukee. How you doing this morning? Doing
we're
great.
yeah, we're glad to have you. So we've been talking mostly about insurance, life insurance in
Yeah,
particular
yeah,
today,
yeah,
the
yeah.
different types of life insurance, and we were talking about having a term policy and an investment. I'll call it on the side.
Right,
Having
right,
like a
right,
Roth IRA that you've talked
right.
about a little bit, and that's something that you're able to help people with. But I was saying to you over the break, I will be remiss if I don't stick in my Columbia Savings and Loan
Exactly.
Association plug right there too. It's not a Roth IRA, but what you can do is to come to Columbia and open a savings account.
Savings account. Yeah.
Open a savings account with Columbia Savings and Loan. Either give us a call at 414. What's the number, Doc? I don't know what my problem is. I just had a
Let
mental
me see if
break.
I got this right. Yeah,
374-0486.
that's it. Yep.
414-374-0486.
0486. Yep.
I don't know why. Just like I blanked for a
Yep.
second. Call us up or stop in and just tell them you've got $50. You want to open a savings account and start saving some money at Columbia. And the thing is, no, we're not online right now, but that'll help you save because then you can't go and swipe your card and pull the money
Pull the
out,
money out.
right?
Right.
So
Exactly.
so take that and use that to your advantage, right? For
Amen.
right now to come and put some money in Columbia. And we talk about the local churches and other organizations come and support the last standing black owned bank in the state of Wisconsin. Please come and put your money at Columbia. Your money can grow with us just like it can grow with any other organization or
Amen. That's
institution.
right.
So come and support what we're doing because what this bank is founded on is a mission bank. And part of our goal is to be able to finance homes for people in the black community. So who can argue against that? Come and put your money with Columbia. So that's my pitch. But Dr. Fuller, I did want you to give your contact information so that if people have questions and maybe even want to schedule a one-on-one appointment with
Mhm.
you, that they would be able to do so. Will you please let the people know how to reach you?
Right. If you've been interested in me adding, talking about what I do as it relates to the investment component, the life insurance component, you want to contact me, you can do it at area code 414-614-1572. It's Pastor Mose Fuller. And so, like I said, it's a, insurance is about an education, and people really need to know that everyone need to be insured, you know, especially, you a young family, young people, got kids, family, you need to insure your family. You need to talk about it. You need to talk about how can I protect my family? How can I do the things that biblically speaking is really demanded that I do? Can anyone take care of my family better than I can? Some things you can't delegate. And one of the things that I don't think anybody can delegate is the responsibility of delegating the responsibility of the burial of your family or your loved one to somebody else.
Right.
That's just that you just can't do that. That just yeah. Now we have to be able to do that. We have to be able to take on the responsibility that I'm responsible for my family. If I got a family in this world, that's my responsibility.
Okay. Well, I couldn't have said it any better. Dr. Fuller, again, thank you for being here. I hope that this discussion has been informational and helpful to the community. We'll be back next week with more information, and we're looking forward to talking to everyone then. We'll be back next week, Thursday at 11. Thank you so much for listening. Money Talks with Attorney Coral.